One falling market isn't scary. There's cycles, it's life, it's business. There's always factors that cause them. We had talked earlier about personal credit card debt being up, the cost of living up, taxes and fees everywhere you look. I mean, everyone trying to take our money in every different direction. So none of that was scary when I talked about it in January, getting ahead of a potential recession, which is already here, and they'll confirm this in 3 to 6 months. But we'll start with the stock market. It sold off, hit every target that I had listed within 3 to 5 days. It kind of annihilated all the charts. It was very, very steep and aggressive. And it's very hard to get direction now when the market's running on emotion. So nothing secure to hang on to. We continue to have these wild swings. So the problem this time is that it's a very unique time in history because stocks, bonds, and the dollar are all falling at once. And that's three things you don't see a lot because a sell-off in the market usually means that they're going to put their money into the bond market. So rotating into something more safe is kind of like the norm. You don't have them all go down at once, but that's not happening. And there could be a few reasons. Other countries now selling our debt. Japan and China are big owners of that. Lack of faith in the economy. Could be retaliation for tariffs. Could just be a global rebalancing. Could be losing faith in the dollar or our economy. Or just funds mitigating risk. So could be short term, could be more long term, depending on the players. But the bond market moves trillions of dollars a day. So it's very hard to see the inner workings this quickly. But at this moment, we have a 10-year treasury going up. So rates going up while 401ks and brokerage accounts are going down. And nobody feels good. I said the market would unlock at 5.5%, spark refinances, home buyers stepping up, smaller houses to bigger houses, because you could settle from a 3 to a 5, not a 3 to a 7. Well, the market is at straight gridlock at 7.5 and above. Housing moves the economy. It's one of the biggest influences we have on it. It's what saved us during COVID, housing. And right now, I'd suggest going back to my recession-proof videos. Start looking at your own budgets, access to equity, things like that. Because without knowing if this is a short-term thing, a short-term blip, or a long-term situation that we might be in for a while, it's always better to be prepared for the long-term stuff. So go back to those recession-proof videos, take a look at them there, and don't make any drastic moves now is the big thing. Stock-wise, if you're a long-term player, you stick with your plan. Just don't wait for a big dip and dump everything in because you don't know if that's the last big dip or we're going to have another one. If you need to buy a house, continue to look for your house as long as you can afford it and your job is stable and secure. You have to plan for the long term, and we all hope for the short-term stuff.